But ultimately, I think what Bitcoin is essentially creating that monetary base, the store of value base, in which once you've got that, all things can hang off it. And I'd seen that how we went from physical mediums like CD to MP3s. It took about 12 years for us to go from CDs to iPods. And I figured maybe we've got 12 years before this thing I've never heard of becomes, a new digital online version of gold. Seemed like it was plausible, so I bought one Bitcoin and figured, if that happens, it should be worth $450,000 US. This was the most volatile 2 weeks we've had in all of 2021. And what happened was Bitcoin was really setting up to move upwards. It had been in a consolidation band for months, right? And any speculative trader who sees this thing consolidating and resting is resting for another coil up and sprint and breakout upwards, right? So that's what a traditional trader would do. And in this sort of, it did break out. It broke out, I think, 62,000 was the prior resistance that was holding the price down. And it did break out. And at that point, there was an immense amount of speculation on the futures markets, where you can trade at a very high leverage. And so everyone was very levered upwards. So whilst in that setup, a big proportion of the mining network went offline because there were some safety issues around the power stations in one province of China. And they were doing safety inspections across all of these power stations that were feeding a lot of the miners. I think the estimate is around 25 to 35% of the network is powered in this one province.
Wow.
So when they shut down, and they shut down at a critical point in the network, every roughly 2 weeks, the Bitcoin network adjusts the difficulty, we call it difficulty rate, which keeps in tandem keeps the miners in check. If there's a lot of power going into those miners, the difficulty increases so that the two match each other, and we get this nice consistent kind of block schedule of coins being minted and processing times. And so this whole thing stepped up. Difficulty stepped up right when a quarter of the network fell off. And so as this hash rate, essentially the maths that were being crunched, plummeted, it was like at a certain point, the processing of the transactions, those blocks, started to slow, and there was a bit of congestion, and that was when everyone woke up to it and they saw the hash rate drop. When the hash rate drops, if you look in the history of it, there's always been a correlation, and it doesn't take much for speculators to be scared if they're over leveraged. If you're going 20x leverage, which is the majority of these contracts on Binance, for example, you're going to get out of that situation because you can't afford for the price to come downwards. So these guys started to unwind, and they started to sell down their position. And the people that weren't, I guess, awake at the time that happened, because this is a 24/7 globally traded market, the price sold down to a trigger point, where either they got liquidated or their risk protection kicked in, and they dumped, essentially sold. And so there you get this cascade of selling, which then sort of pushes the price down to the next liquidation point. And so this whole thing starts to wick downwards. The whole price collapsed very, very quickly as everyone was being liquidated. So the price plummeted to 51,000 from the sort of 60,000 mark initially. And so that was a liquidation point from the speculation. There was about $5 billion of derivative contracts that were liquidated. Read that as people being bankrupted for that amount of selling. There was 1 million traders that got liquidated on that day.
Wow.
So obviously the market now is in fear. And then what I saw was an impulse of coins being sent into the exchanges. You know what I say is, like, if institutions are buying, they're essentially coins that are being bought by a custodian that is owned by a whole lot of mums and pops, right? It's public markets. Whether you're a public company or a hedge fund, they have their investors. So essentially, it's just very large concentrations of money held by a lot of people. And so if you were to say Tesla bought $1.5 billion of Bitcoin a few months back, that, I don't know how many people own Tesla stock, but that's a lot that now have exposure to Bitcoin. And I think it de-risks the failure points, because the more people that have vested interest in the network and holding Bitcoin, the more that's going to be defended against, attackers like governments and politicians that want to shut it down. Even if I don't think they could shut it down, but it just makes it more difficult for them to provide bearish action to this. And going back to I do want to address the internet adoption kind of analogy, because I did this research near the start of this year, and I brought all the data points from forensically looking on chain, on the blockchain, to see the individuals that are buying in, and also through industry surveys that have been buying in through the exchanges. It's been a very, very consistent doubling over 12 years. Well, the first year just went crazy high, and then after that, it's almost like a Moore's law. Every year, the number of users that are on the network double. And so we're currently at around 2 to 2.5% of the world that have exposure to this asset class. And so that's significant if you think about next year that being 5%, the year after that being 10%, and so forth. So current projection right now is in the next 4 years, 1 billion people will have exposure to this asset. And remember, this trend has been going on for 12 years. So it's not at all outrageous. It's actually a conservative estimate that 1 billion people have access in the next 4 years, and then after that 2 billion, and so forth. So we're very much on the tail end of the adoption, even though we're only 2 to 2.5% in. So yeah, it's interesting.